What's up, family? Today I'm going to talk about how to trade debit spreads on Robinhood. I'm going to also show you guys how to open and close a debit spread and also how much money you can make and lose with a debit spread. So before I get started, you guys might want to make sure that spreads are enabled on your account because you need to have option level 3 in order to buy and sell spreads. Alright, so you would want to open up a debit spread if you think a stock is going to move in a certain direction, but you want to limit how much you can lose. Alright, so I'm going to be using SPY. So you'd want to click trade options. And let's say I want to buy a call debit spread because I believe SPY is going to go up. So you would want to buy a call at a lower strike price and sell a call at a higher strike price with the same expiration date. So for example, if I buy the $333 call, instead of paying $433 for the call, I could buy the $333 call and sell the call right above it. Let's say I sell, make sure you click sell, and I sell the $336 call. My total cost for this debit spread would be $160. The most I can lose is what I paid for the debit spread, and the most that I can make is the difference in the spread minus the premium paid. So because this is the $3 spread, the max profit is $300 minus a $160 premium, and the most I can make is $140. If I wanted to increase my profit potential, then I can widen the spreads, and if I wanted to lower my profit potential, I can tighten the spread. Now, you won't see the max profit until the option expires in the money. So SPY has to close at $336 or higher on September 16th, but you don't have to wait until expiration to close your debit spread. You can close the spread at a profit. So let's say you make $100 profit. You can close the spread, not have to wait until expiration, and yeah, you might have left $40 on the table, but let's say SPY closes at $332 on expiration, and the day before you was in profit, all your profits would be wiped out, and you would end up losing money because the contract is worthless. You can also close your spread at a loss instead of letting the spread expire. But to place the order, you would click continue, and you want to put the amount of contracts you want to buy. So I want to buy just one debit spread. And for the limit price, you can either stay at 160 or you can go closer to the bid or the ask, but you'll get filled a lot faster if you go closer to the ask. So, but let's say I just keep, then you want to click review order. Then you want to click submit order and then wait to get filled. Now, if you wanted to buy a put debit spread because you believe SPY is going down, you'd want to make sure you click put and buy the higher strike price and sell the lower strike price. So let's say I buy the $333 put and I sell the $330 put. Then my total cost would be $105. Click continue and then click review order, and then you want to click submit order. One thing I want to let you guys know, if you do decide to let your spreads expire, you might see a negative buying power in your account, and I just want to let you guys know that don't worry about that because Robinhood hasn't finished exercising both options, and it usually takes about a day to complete. To close a debit spread, you want to make sure you click close and put the amount of contracts you want to sell. One. And to get filled faster, you would have to go closer to the bid price, or you could just wait to get filled at whatever price you want. Then you're going to want to click review order, and then you're going to want to click submit. Alright, that's how you trade debit spreads. If you guys found the video helpful, please give it a like. And if you guys aren't subscribed, please subscribe. And if you guys have any questions, please comment below, and I'll catch you guys on the next one.